Hello everybody, Clay Carroll, First Home Mortgage Senior Loan Officer. I wanted to talk to you today about some of the information you might have seen on the news in regards to the Fed hiking the interest rates this week. So as many of you may have already seen that the Feds took the interest rates up by 1/4 point, which is a good thing. And big picture wise, that means the economy is heading in the right direction, and all these things have been anticipated for a long time to come, but we're finally getting to the point where the market is strong enough to be able to support these types of things. So it's widely believed that we'll see that happen. Some say 2, and many people say 3 times next year by an additional 1/4 point each time. So, but the purpose for me coming to you today, this is more geared towards somebody that may be thinking about buying a house. So I wanted to talk to you about the difference and what you might see with those rates and how that may affect you if you're one of those people. So. I want to take a $300,000 mortgage, for example, here. And many people, go back a little bit, many people believe that when the Fed hikes the interest rate by 1/4 point, for example, that means that the consumer pays 1/4 point more for their interest rate, which is not necessarily the case. There's a lot of factors that go into determining what somebody's interest rate is that they qualify for. And that's a conversation for another time or individually on a case-by-case basis. But today I want to talk to you about what a 1/4 point or a 1/2 point difference in the going rates that you qualify for, how that might look for you in terms of payment and what to expect there. So in this particular case, we're going to go with the $300,000 mortgage. On a $300,000 loan amount, the difference in a 1/4 point comes up to roughly $44 a month. And a difference in a 1/2 point is roughly $88 a month. So, and essentially what you're looking at is, it doesn't sound like a huge deal, but when you take it and you're trying to keep a budget intact, that also means that you're looking at roughly a $20,000 loan amount difference in order to keep that exact same payment where you want it to be. So my purpose for coming to you today is to allow you to get out ahead of the thing. And try to, for those people that may be sitting on the fence, just reinforce to you that if we do start to see rates climb up to the mid-4s, the upper 4s, or maybe even the low 5s or something along those lines, that it's really important that if you're thinking about doing this, now's the time to do it, because it could be the difference in that extra bedroom, that extra bathroom, maybe the updated kitchen, or whatever it may be, for the exact same payment. So, and I want to remind you that all these things are happening because the market is doing well. So these are good things that are happening. But you want to be in there first. You want to be ahead of the game and make sure that you're getting into that house or that next house, that move-up house, before you start to see those rates increase. So I would love to talk to you on a case-by-case basis. Everything is confidential. Or talk to your loan officer if you're in an adjustable rate or have a home equity line of credit. If you don't have somebody you'd like to talk to, I'd be happy to be that person. You certainly know how to reach me. You can reach me on my cell phone at 804-614-6515, or you can also reach me through my website at rbamortgage.com. So thanks everyone for watching. Hope you've learned a little bit of something out of this, and like I said, I'll talk to you soon. Bye-bye.